Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Thursday, May 19th. Stocks on Wall Street are getting an early boost from a relatively strong report on the U.S. labor market. 409,000 Americans filed for first-time unemployment benefits last week. That was a bigger decline than expected from an upwardly revised reading the previous week. However, the 4-week average of jobless claims, considered a more accurate gauge of employment trends, inched up again, remaining at its highest level since November. Following the data, Treasury prices are losing ground along with the U.S. dollar, but commodities prices are holding steady. Right now, crude oil is trading right around $100 a barrel. Yesterday, the International Energy Agency issued an unusual call to oil producers to boost supplies. The IEA said that if prices go any higher, it would risk derailing the global economic recovery.
In other global news, Dominique Strauss-Kahn has resigned as managing director of the International Monetary Fund. Over the weekend, he was arrested on charges of sexual assault and attempted rape, and he's now being held at the Rikers Island jail in New York. European leaders are reportedly closing ranks behind French Finance Minister Christine Lagarde to take over as head of the IMF. Meanwhile, we have some M&A activity to tell you about. Thermo Fisher Scientific is buying Sweden's Fadia for $3.5 billion. Fadia is currently owned by the private equity firm Cinven. The deal will allow Thermo Fisher to add Fadia's allergy and autoimmune diagnostic tools to its line of medical and research equipment. Shares of Thermo Fisher are jumping nearly 4% on the news.
Earnings are also back in focus, with retailers once again dominating the list. Perhaps the biggest name on today's calendar is Sears Holdings. It swung to a bigger than expected loss of $170 million in its fiscal first quarter, as sales at both its Sears and Kmart stores declined. The company said that bad weather, economic pressure on customers, and the stimulus measures that helped results a year earlier all weighed on its bottom line. Right now, shares of Sears Holdings are dropping 3%. Ross Stores is also losing ground in early trading, down about 1%. First quarter earnings at the off-price retailer topped expectations, but its profit outlook for the current quarter and the full year fell short of estimates. Meanwhile, GameStop is tumbling more than 6% after disappointing results. But PetSmart and Dollar Tree are both up about 5% in early trading. And Tiffany & Company is gaining ground after boosting its quarterly dividend by 16%.
One other retailer is among the day's biggest stock movers. Big Lots is falling nearly 10% after the Wall Street Journal reported that the discount retailer has decided not to sell itself. Two groups of private equity firms reportedly put in bids, but Big Lots was apparently not satisfied with the offers. And finally, there's a new public company debuting on the New York Stock Exchange today. The social networking site LinkedIn is trading under the ticker symbol LNKD. It opened at $45 a share, at the top of its projected range, after boosting that range earlier this week. The initial public offering is expected to raise more than $200 million for the company. That's the latest from Weiss Research. Have a great trading day.